Taylor, you mentioned something that piqued my interest and I think is relevant to a lot of our clients because a lot of people live out of state but buy real estate in Florida. And you mentioned, oh, I have to add in my travel expenses. In your opinion, as a CPA, what is a realistic spend? What's a realistic number of trips to Florida for somebody that owns property here and wants to come once, twice a year to check on their rental properties, meet with their property manager, whatever the case may be. How closely is the IRS watching that, and what is realistic in the eyes of the tax man?
Yeah, so a really good question. There is some subjectivity to it for sure. But the general rule of thumb is that if you're spending more than half of your time on a business trip, I mean on real estate related activities in that location, that it is tax deductible. And a really other interesting rule about that is that if you fly somewhere on a Friday, uh, you, so just for example, you fly somewhere on a Friday, you work 5 hours on real estate. You then have Saturday and Sunday that are the weekend, and you also can work on Monday. The weekends actually count as business days because they're weekends. So it's a really nice rule to kind of stack your trips around weekends because they are counting as business days. Um, so as long as you're spending more than half of your time, I think it's a reasonable expense to take. And what I mean by that is, are you meeting with your property manager when you go down? Are you going to tour your properties? Are you looking at vacant units? Are you meeting with your attorney or your title company? As far as what's normal, it really depends on the size of your portfolio. Um, so personally, I like to go down 4 to 6 times a year. And I think that number could probably hold true for anyone that's got more than a couple rentals. So just totally reasonable, as long as you can substantiate that you are working at least half the time on business days. So